Hey guys, so I thought I'd have a quick look at inflation as it's a bit of a hot topic at the moment. Might turn into a little bit of a rant, but here you go. So, looking at the US CPI, it seems to recently have sort of leveled off. This is the actual CPI number rather than the annual inflation rate. So, you've seen sort of, if you go on to the column charts, just to show it a little bit better, you've seen the first month of actual decline in the actual CPI number. So year on year, it's still sort of quite a bit above where we were previously. So if you come down to the stats that they provide with this as well, you've got a previous month figure for the year on year CPI of 9.1%, and the current figure is 8.5%. So a lot of people sort of see this as prices coming down, which it's not necessarily. Look at the month on month. Previous month prices went up 1.3%, and this month they're showing as 0%, which in reality it's actually slightly down, but I guess they've rounded it off to 0%. But yeah, so if you sort of look at the 5 year graph, then you can see sort of prices were steadily rising and steadily rising, and then you get this sort of obviously since the pandemic sort of we opened up again and we started to get this mega inflation following the money printing as well. Yeah, you start to get prices rising a hell of a lot, and you can sort of see this basically as an S curve sort of over time. So you sort of have normal periods here of what they try and stick to 2% annual inflation, and then something happens or a number of things happen and cause that to rise a great deal. And this period can be sort of anything from a couple of months to sort of 7 or 8 years you had in the 70s, of the just constant sort of high rising prices, 10% inflation, 15%, and then sort of when it eventually levels off, as you can see. So prices wouldn't, if you think of this basically as the CPI number that you have here, you don't ever get prices really come down again. They just stop going up as fast as they were. So obviously, if they're not going up a huge amount here, then the year-on-year figures you're starting to say sort of it's 8% above this lower period here, then it's 6% above here, and then 4% above here. So it looks like a dramatic drop in inflation, and as I say, some people see that as prices actually dropping, when in reality it's just sort of not drastically as up compared to last year. So yeah, that's sort of basically how the S curve type inflation works. If you look on the sort of line chart and go to the maximum, so this is sort of 50, 60 years worth of inflation, and it very rarely comes down, if ever. You sort of had one period here during the sort of great financial crisis where prices sort of came down a bit and went up within sort of a couple of years and resumed trend. But yeah, basically they do always go up, just at varying degrees of up. So you had the sort of 70s inflation here, sort of a long period, as I say, 7 or 8 years of steepness, and then we sort of got back to normal-ish. But if you look at the rates, so the rates obviously is more of a steady chart with ups and downs. You sort of got probably an average of between 0 and 5% here. So as I say, they tend to gravitate towards 2% being optimal, but you get spikes up at sort of various points, and sort of some short periods generally of, normally in recessions, below zero, so deflation. Prices coming down, this is sort of the last thing they want, because if people sort of think something is going to be less expensive next year, then they probably hold off buying it. And if they think it's going to be even cheaper sort of the following year, you just get this sort of spiral effect of if it's sort of not essential purchases, people basically just hoard their cash waiting for cheaper and cheaper prices, and that obviously feeds through to poor sales, poor earnings for companies, poor sort of output of GDP and everything. So yeah, nobody sort of generally wants deflation. They want a sort of steady but fairly low increase in prices. So prices going up 2%, hopefully wages going up 2%, maybe a little bit more, and people sort of feel a bit better off over time. Generally, people would sort of ignore the 2% inflation. They sort of get maybe a 3 or 4% pay rise. They think they're 3 or 4% better off, where really you're sort of 2% better off in real terms. So yeah, that's sort of the long-term targets that they tend to go for, and sort of what happens when they exceed those on either way. You either get sort of a tightening on interest rates when they go up, or sort of generally before when they went down, you didn't have money printing and that sort of thing. They just let it run its course, and you had to sort of come out the other side of it basically. But now when they go down, you have the money printing. So you look at sort of the pandemic lows here, it sort of didn't even go below zero, and you sort of got straight away the money printing, and sort of other factors have sort of driven us to where we're at now. So that's the US, but looking at the UK, we have slightly different figures, sort of similar over the last year to the US, but we are now starting to get some sort of UK specific things going on with energy bills and that sort of thing with the Russia conflict. So they do actually show sort of an overall CPI rate of 8.2% here on the ONS, Office of National Statistics website, and they break it down into sort of various points. So the last 12-month inflation rate, this is for owner occupiers, so people that own a house. So they're saying food has gone up 0.9% of that total CPI rate, alcohol and tobacco up a little, clothing and footwear up a little, housing and household services, so that's the big one. That includes your gas and electric bills and that sort of thing. Furniture and household goods up a bit. Transport, which includes used cars and petrol. New cars as well, I guess, but the sort of bulk of that, I guess, is petrol and or petrol and diesel, and probably used cars, because they have increased with the sort of chip shortage. And then, yeah, recreation and culture, restaurants and hotels, they're saying have gone up quite a bit because of wages, and then other goods and services. So, yeah, they do highlight at least that the housing and household services has sort of gone up, and that's a large portion of this CPI. But if you dig into some of the other figures, they are sort of having a fiddle about with these CPI numbers. So this is the change in weighting that they give each individual sector. So if they wanted CPI basically to be really low, then you could just take something like housing, water, electric, gas, and other fuels, and just make that sort of 1% weighting, and then it doesn't matter how much they go up if you're not assigning a very big importance in that to the number, and you just put 90% on clothing and footwear, for example, then you can make CPI sort of whatever you like. So they had 328 points, if you like, out of 1,000, so 32.8% in housing, water, electric and gas, in February to December last year. Not quite sure why they do a January update and then an update for the full year, but they've started doing this. So, yeah, year on year, they've changed those bills to a much lower weighting. So, sort of what? Well, not much lower necessarily, 1.4% lower weighting. And if you come through to their explanation, I think they've got a bit of a nerve putting this, to be honest, unless I'm missing something. So the underlying expenditure within housing, water, electric and gas bills is flat between now and last year. So just let that sink in a little bit. Think of your own sort of bills and electric, water and gas and that sort of thing, and is it flat from last year? If you're on a fixed price tariff, maybe it's staying the same, but eventually they're going to go up. Yeah, flat between periods. Not convinced by that. So they're saying the drop in weight is caused by other things other than housing, water, electric and gas going up by a lot more than they have. So come back to the chart here. So they've put food up ever so slightly, not a huge amount. Alcohol and beverages and tobacco, they've put up sort of by more relatively than food and non-alcoholic beverages. So yeah, not sure why they think we're going to be spending more on tobacco and alcohol, going out more maybe, but yeah, I think food obviously is going to be more important to people at the moment. Clothing has come down. Furniture and household equipment and maintenance has gone up from 49 to 63. So I kind of think with rising bills, are people really going to be sort of buying a lot of furniture and household equipment? Sort of think that's something you would hold off on and just pay your bills that you have to. So yeah, I think that's a little bit of fiddling, to be honest. Housing, gas, electric bills and everything coming down, and sort of furniture going up, considering furniture isn't really going up all that much in price. I think if you go to the explanations there, they're saying furniture has increased 64%. So they've put that up in the weighting. But yeah, if you're an average Joe, I would say you're not buying furniture at the moment, and your inflation sort of is reflected by food and these bills going up, and transport. So yeah, the transport has gone up slightly, which again, if you come down to transport here, they're saying cost of petrol has increased by a couple of percentage points off the back of a 20% increase in underlying expenditure and 8.7% increase in price update factor. So it's a little bit vague, but 20% sort of underlying expenditure increase. I think if you look at the sort of average petrol prices in 2021, you're sort of looking at £1.25 to £1.40, and we're now sort of, I mean, it's come down since these figures were published. Sort of when they were out, it was £1.90 really, £1 sort of 65 to £1.90 through a fair amount of 2022. So compared to sort of £1.35, say, that is quite an increase, a lot more than 20%. So again, sort of fiddling a little, and yeah, they've got sort of these other figures haven't moved quite as much. Restaurant and hotels has gone up a hell of a lot. Again, I think this is them saying sort of wage increases for everyone has pushed those prices up. But again, are you really going sort of on UK holidays and that sort of thing at the expense of your household bills? So yeah, I think it's a shame that they do. Admittedly, they acknowledge that these sort of areas are a large part of the inflation. Transport, housing, and household services are sort of fairly high in this sort of split, but I do think they're sort of manipulating it a little bit lower. They can't sort of pull a Houdini and say it doesn't exist, but they can sort of tinker around the edges and sort of make it seem a little better than they want to, and sort of certainly month by month increases where they're sort of doing these little mini updates as well. They can sort of, yeah, as I say, tinker around the edges and make things a little bit more palatable. So yeah, I still think obviously you're not going to get prices drop. We probably have to get used to this and this be the new normal. They'll probably provide some help with energy bills and that sort of thing in the short term, and probably try and sort of basically get you used to the higher prices. You'll sort of get this level off maybe of inflation, certainly in the US, because they don't have the same sort of energy problems that we do, sort of a bit more self-sufficient, and they'll sort of come onto this steady increase. So by the time this sort of extends a fair amount, then you'll be sort of 2 or 3% more than this time last year, basically. So this will be last year, and you'll be a little bit higher over here, 2 or 3% above that. And yeah, you're not going to get back to these prices, but they'll see that as back to steady increases. So as you say, look on the max chart for here, going up at that steady rate, and wages sort of going up similarly. This is what they call the soft landing. So trying to avoid a recession and yeah, just get back to 2% basically. So yeah, just quick video. Let me know what your thoughts are on certainly the weighting changes here, and whether they're sort of having a fiddle about. And yeah, like and subscribe. See you soon.